You're missing a $20,000 plus deduction the IRS just made permanent, and most 1099 workers have no idea it exists. Meanwhile, everyone's celebrating a tax break that's worth exactly $0 if you're self-employed. In this video, I'm breaking down exactly what the new tax bill changed for 1099 workers, freelancers, and small business owners. The real wins, the myths that don't apply to you, and the numbers you actually need for your 2026 taxes. No fluff, just what to claim and what to skip. Quick background. This is the One Big Beautiful Bill Act, signed into law on July 4th, 2025. It made a bunch of existing tax cuts permanent and added new deductions running 2025 through 2028. Some got massive headlines. No tax on tips. No tax on overtime. But headlines are written for W-2 employees because that's most of the country. If you file a Schedule C, get 1099s, or run an LLC, you need the self-employed version of this story. The overtime deduction lets eligible workers deduct the extra half of time and a half pay, up to $12,500 a year, or $25,000 married filing jointly. It phases out past $150,000 income, or $300,000 joint. Sounds great. Here's the problem. Overtime is a legal concept from the Fair Labor Standards Act, and it only exists inside an employer-employee relationship. As a 1099 worker, you don't have an employer paying you time and a half. You have clients paying you for a job. You earn business income, not wages. If you're a hybrid worker with a W-2 job plus freelance income, you can claim this on the W-2 portion. But if 1099 income is your whole business, this deduction is worth $0 to you. Not reduced, not partial, zero. The tips deduction is different, and I want to be precise here. Unlike overtime, it's explicitly open to self-employed workers. You can deduct up to $25,000 in qualifying tips from taxable income. 3 real conditions though. 1. Your occupation has to be on the IRS's official list of jobs that customarily receive tips. The IRS finalized this list in April 2026. It covers over 70 occupations, from bartenders and servers to hairdressers, golf caddies, and taxi drivers. If you're a coach, an e-commerce seller, or most freelance service providers, you're not on it. 2. It phases out past $150,000 single or $300,000 joint income. 3. And almost nobody says this part, it only reduces federal income tax. It does not touch Social Security, Medicare, or state and local taxes on that same tip income. It's a real deduction. It's just narrower than the headline. So if those 2 headline deductions barely touch you, what actually does? There's one provision almost no tax preparer brings up first, and it's been sitting there since 2017 waiting for you to use it properly. Here's the provision that matters for almost everyone watching, and it gets the least attention. The qualified business income deduction lets you deduct 20% of your net business income before calculating income tax. It's existed since 2017, but was scheduled to disappear after 2025. This bill removed that expiration. It's permanent now. In real numbers, $80,000 in business profit means a $16,000 deduction every year, indefinitely. For 2026, if your taxable income is under about $201,750 single or $403,500 joint, you get the full 20%, no complications. That covers most freelancers, coaches, and e-commerce sellers watching this. Even higher earning consultants, healthcare, or legal professionals benefit. The income range where this phases out just got wider. And starting in 2026, if you have at least $1,000 in qualifying income, you're guaranteed a minimum $400 deduction. Build your tax strategy around this one. Not tips, not overtime, this. Second real win, bonus depreciation. Buy equipment, a laptop, camera, machinery, and put it into use on or after January 19th, 2025, and you deduct 100% of the cost the same year. Permanent now too. Without this bill, that percentage was on a countdown to 0 within 2 years. Buy a $10,000 piece of equipment for your business, and you write off the full $10,000 against this year's income immediately. Let's clear up the forms. This caused real unnecessary panic. The 1099K threshold was set to drop to $600 with no transaction minimum. This bill reversed that. You only get a 1099K past $20,000 in payments and 200 plus transactions. Separately, direct client payments reported on 1099 NEC or 1099 MIC now trigger at $2,000 instead of $600, starting with 2026 payments. What hasn't changed, you still report every dollar of income, form, or no form. One more relief item if you itemize. The SALT deduction cap jumped from $10,000 to $40,000 starting in 2025. Before you plan your year around this, one honest catch. Neither QBI nor the tips deduction touches your self-employment tax. The 15.3% you pay on net earnings for Social Security and Medicare. Those deductions only reduce income tax. When you estimate what this bill saves you, don't just look at your tax bracket. Self-employment tax is a separate, mostly untouched piece of the bill. So here's what to do. 1. Stop expecting anything from the overtime deduction unless part of your income is genuinely W-2. 2. Check the IRS's finalized tipped occupation list before assuming it applies to you. 3. Claim your 20% QBI deduction. It's permanent, and if you've never claimed it, this is the year to ask a preparer about it. 4. If you were planning equipment purchases anyway, buy this year for the full write-off. 5. Don't panic about 1099Ks under $20,000, but keep reporting every dollar regardless. That's the real story. 2 headline tax breaks that barely touch 1099 workers, and 1 permanent deduction doing the heavy lifting. Subscribe so it hits your feed.